Hey guys, back with another video with Trade Forex. In today's video, I'm going to share with you something extremely valuable and very important. I wish I had this type of video when I started trading. It would have made my life way easier, but I never had that, so I decided to make this video for you to make your life 100x easier. And the reason I'm doing this is because I know how painful is trading, how crazy is the journey, and it's probably one of the most difficult things I ever experienced my whole life. So if you are a trader or you're trying to become a trader, I'm pretty sure you can relate to this. So if you are learning about trading, I'm pretty sure by now you have realized that there are so many strategies, so many concepts, so many theories available everywhere online, in any social media, in any social platform, which is a bit overwhelming because you have all these kind of things and you don't know which one you should be learning, which one is the best, or which one literally works or not. Now, I'm about to reveal the biggest secret that I'm not really saying a secret. I think this comes mostly from my experience because I know so many people still don't understand this, what I'm going to share today. But that's the truth and that's the reality. And I'm sure after the end of this video, if you start backtesting and trying to learn what I'm telling you all, you will definitely start realizing that actually everything that you're learning, every strategy, every approach that you're trying to use, at the end of the day, they're all same, the exact things. They're literally identical, they're literally the same and literally the exact things. Yeah, let me say that again because I know it sounds weird and crazy, but all the theories and concepts are the same exact things. And I'll prove it to you and I'll show you even a lot of examples on today's video. First of all, here we got like 3 key concepts that I'll pull it out because those are the one very trending on social medias now and are the most used. I know there are a lot of other type of way of trading such as support and resistance, elite wave, harmonic pattern, and you name it, you have it. However, these 3 are the one that are mostly used, and I wanted to break it down for you and to show you what I meant when I say that they all work in the same exact. So let's start first of all with supply and demand, and then we'll move to the other one. Now, supply and demand, usually how do you identify it? You can pretty much see based on the candlestick pattern. Like there are so many candlestick patterns as well, but when it comes to supply and demand, most of the time, if not 99% of the time, the base is always within some small candles, right? So you have usually long wicks, small body, and pretty much the way you see on this picture, that some people, they call it like doji, morning star, evening star, whatever you want to name it, but that's not the name is the most important thing. The most important thing is the shape of the candle that helps to understand what is actually going on. So in this case, you can see there is a base followed a rally, and this rally most of the time are engulfing candles. So they engulf, they make a huge move to the upside or huge move to the downside, and their body are usually way bigger than what they left behind, which is the base. Moving to the smart money concept is slightly different. In this case, the candlestick pattern shapes plays a very different role. In this case, as you can see, the last sell before the buy or the last buy before the sell, the shape of the candle is big, right? It's fat, it's big, and it's also followed by an engulfing candle showing the strength coming out from this order block. And finally, the Wyckoff. Now, the Wyckoff is something that me personally, I never mastered it. I studied it when I started trading. But what happened with Wyckoff is that Wyckoff has nothing to do with any of the candlestick that I was sharing when I talk about supply and demand or smart money concept. Wyckoff has like it's so known called a schematic, right? It's just like it has all these different phases that you have to understand, you have to learn. So when price comes to your point of interest, let's say to the left, you want to see something like this, start making different phases telling you, what's going on. So that gives you a hint or a clue, and it's telling you, okay, the price is probably trying to make a distribution if we are sell phase, or an accumulation if we are on a buy zone, so in a demand zone. So then you can use Wyckoff as a reference for you to take the trade. Now, this is pretty much the basic of how this is structured. Now I'll show you how you can literally use the 3 things in one and make your life easier. So first of all, we have to understand where exactly these type of scenarios happen. Where exactly do I have my drop-based rally, rally-based drop, or my bullish order block, bearish order block, and the Wyckoff. So we all know price does 2 things. It either goes up or either goes down. But how does it go? How does it move? It moves, some people would say it moves in cycle, if they are trading Wyckoff, they'll be like, oh, they move in a cycle or whatever. People that are trading with smart money concept, they will be like, oh, it's going with the structure, the order flow. And people that are trading with supply and demand, they will be like, oh, price is moving from one supply to another one and from one demand to another one. Now, the most important things though, I'll use the order flow here because that's the one that I personally use a lot and is the cleanest one that you can see on the chart, is that if you have, for example, a price moving to the upside, then you expect a retracement, right? So you have something like this. In this zone over here, you want to see something like this, which is the drop base rally. Now, when you have this, so you have like, let's say a doji candle, something like this, right? Follow it from a huge engulfing. Then you have your base, and that base becomes your point of interest from where you can take the trade. And the same exact things goes even for this one. So price is going high, low, high. In this zone here, you want to see a clean fat order block. I'm saying fat because the shape of the candle is completely different than the one we had in supply and demand zone. And then you might gonna see a huge engulfing, follow it after the order block, and then you mark up your point of interest. And finally, when it comes to this one, now this one is a bit tricky one and it's a bit advanced, let's say. So even this one, right, when price comes here, makes a new high, now is retracing, right? Here, before, you might not gonna see that because that's where now I'm going to the next point. In this zone here, most likely you have this phase of accumulation that happen. However, if you are, for example, in 1 hour, you will not see that from 1 hour. You must have to go at least 5 minutes or 1 minute in order for you to see the schematic. And now why this is important is because if you have a schematic like Wyckoff and you don't have the test, then you can say, okay, I had a schematic, I had a Wyckoff spring and everything, the test is missing. So that test that's missing, it will be my point of interest. And most importantly, all right, the way you can even use it better is that when price is reaching your POY, then you can start seeing in a smaller time frame again, the formation of an accumulation, right? And then you see the whole schematic happening with different phases. And when you see the break to the upside, you just take the test of the spring and then you go with the trend. So now, what is the key difference between this and these two? These two are way easier in my opinion than this one because me personally, I'm not an expert on Wyckoff. I studied that because I didn't know that there were all the same things. So I had to study all of them. However, these two are the easiest one for me, and the way I trade personally is the mix between these two things. And it's easier because if you're trading 1 hour time frame, it's very easy for you to spot the point of interest just based on whatever is going on. From the last zone, they gave the push to the upside. And the same goes over here as well. However, in this one, it's slightly complex and it's just like some people that they love it. So as you can see, already me by explaining you the basic of how every single one of them are working, is showing you that we all go back to the same zone, which is this, from where everything has started, the origin of the move that did the push to the upside. And obviously, if you reverse that on the other way around, it goes the same exact things for sell as well. So I hope you guys are understanding now where I'm going with this, and you can already see there are a lot of similarities. However, a lot of people will be like, okay, one second, but when I'm on the chart, if I'm on like, for example, 1 hour, right? How come I don't see a clean order block like this? How come I don't see a base like this? Or how come I don't see Wyckoff like this? It's because you cannot never ever stay in one single time frame. Okay, you have to understand that when it comes to trading, multi-time frame analysis is going to be one of your biggest weapon ever. And a lot of people talk a lot about how multi-time frame analysis is important to understand your bias, your directions, and so on. But you can use the same exact multi-time frame analysis also for your point of interest, to refine them, to make your small stop loss, to understand what's going on in certain area, whether it can be a order block, whether it can be a supply demand zone, or even Wyckoff. And now I'll jump on the chart and I'll show you some cool examples. Let's say on Euro GPY, so we are here in 1 hour Euro GPY. Let's see what's going on over here. So we can see price going higher, then suddenly started going to the downside. Okay, look at this. Simple as that, nothing complex. High, low, retracement, low, high, low. So we are in a bearish movement, right? So what did I say before? That where will you look for your point of interest, and where will you be looking for your specific order block or base or your Wyckoff? Always to the extreme that starts the move. So for example here, you see this high meant this low, right? We can clearly see that there's this last buy before the sell to the downside. Now, what did I say before? When you take the buy, like the last buy before the sell to the downside, your candle size has to be big, like has to be fat, okay? So in this case, you can see that this is the last buy before the sell. However, the wicks are bigger than the body. Now, you might be wondering, why do I have to take the one that is fat and that has more body? Because according to the SMC theory, bigger is the body, higher is the volume stuck inside the candle. So that gives you a better understanding of which zone has more volume in order for you to take the trade from. So in this case, if I, for example, remove that, right? Oh, sorry. Okay, in this case, if I remove that, what's going to happen is that in order for you to find the right order block, all you have to do is simply playing with the time frame. You don't have to get crazy. You just have to find the cleanest one, the one that has more volume on it, right? And then you take that one. Like, for example, in this one, you can already see that the bodies is bigger than the wick. So that is already telling you that this zone is definitely a strong zone. Not only that, but look at this. You have, just by doing this little exercise, you have already reduced your zone from this yellow box to all the way down here. And trust me, that's not a joke. Literally not a joke, because sometimes in different pairs, that might be already 5-6 pips. So you're already saving, like, I don't know, 2-3 pips around here. So that's already something to notice for sure. Now, this being said, this is going to my interest. Can I go lower? Yeah, definitely you can go lower, but don't get too crazy with this time frame, because otherwise, if it goes more, you're gonna get lost. As you can see, there are a lot of candles, so don't make it wild or crazy. Just keep it simple as possible. So now this is our time frame. We can see that. So I have already made a video on how to take a trade from an order block. You have usually the wick at the beginning, opening, or you take somewhere around the 50%. Let me be more accurate. So you can take your fib. Take the 50%, as you can see, yeah, somewhere around there, and that's it. So this zone literally itself, and now is becoming your point of interest. So will I be taking the trade? I don't know. Let me see. If the zone is small, then yeah, definitely I will go for it. If not, then I'll just wait for lower time frame confirmation. So now let's see what happens when price gets into that zone. So we can already see that price is already giving us type of reaction from that zone. So that I know it's my point of interest. Price is getting inside of it. Now let's wait and see what happens next. Price is going, bam. Look at this. Okay, perfect. You tap my 50%, and then the next thing you know, price is going down. That's it. So that would have been a very beautiful trade taken based on an understanding of the order block. So, okay, so if that's the order block's moment concept, what's going on from someone that is trading supply and demand? Okay, now you might be like, okay, I don't see any base. There is no base. There's nothing else going on over here. Well, actually, there is a base and you don't see it. Why? Because you are not on the right time frame for you to identify that. So let's go to 25 minutes. What can you see over here? Like, do you guys see what I'm talking about? Look at this. There is this base, you see, very tiny body, exactly as the way I shared in the picture. Then you have 2 wicks on the both side. And as you can see, that has played out nicely. So let me show you the picture again so you guys can see what I'm talking about. I don't want you to get lost. Where is the picture? I left it somewhere below. Yeah, look at this. So my entry was based on the order block. And now I just showed you how to identify this about the base. And the base is literally that one over there, which I've seen from exactly here in this zone. So how about Wyckoff? All right, so now in order for you to know Wyckoff, what did they say? You have to go to smaller time frame, right? So when you come to smaller time frame, now I'm not a Wyckoff expert, but look at this. That's how everything starts. There's definitely some sort of schematics happening over here that is making the Wyckoff. Or as I say, maybe there's a Wyckoff happening over here, like, you know, because you can see that there's liquidity, all right? So Wyckoff has a lot to do with liquidity. Liquidity get taken out. Maybe that's a spring. Maybe there's a test missing over here. Some people will be just looking to take the trade from the test. And the same goes over here as well. When price reach that level, you might gonna see or not, but here there has to be definitely a schematic, some sort of distribution, and spring, break, test, and we go away from that. So as you can see, like literally using just one example, I literally share with you now the smart money concept, the supply and demand, and the Wyckoff. So at the end of the day, everything is the same exact things. Now, is it worth it studying all of that? Should you actually study all of that, or you just should be sticking only one of them? Me personally, I've studied all of them because first of all, I didn't know that they were the same thing. And then secondly, one thing that I understood after studying all of them is that sometimes you might cannot fully understand everything around one specific concept. So in this case, what you have to do is, like, after studying the 3 theories, you might can pull out some data from one to another one and try to mix and match it, like the way I said before, right? When I said that I trade on a concept and supply and demand, that's pretty much what I do. So if I struggle finding my order block, it's because I don't see an order block clean, fat candle or whatever. I'll be like, okay, hold on, what can I do over here? Let me see. How can I simplify my life? Let's say there was not that 30-minute candle that we've seen before. I will be definitely taking this doji over here, because that will be telling me, okay, this zone here is the exact zone from where I'll be taking the trade. So you see, just using two different concepts, supply and demand and smart money, I literally combine them in order for me to find my point of interest and then taking the trades from the right point of interest. So I'm not going to tell you what you should be doing or not. This is literally everything on you. But the purpose of this video, it was to give you a little breakthrough to show you that at the end of the day, everything works. And the same goes for support and resistance as well, because I'm not a support or resistance trader. But let's say you have a support or resistance somewhere, in these zones, you can clearly see that how these zones over here is aligning with our order block, with our supply and demand, and you name it, you have it. It's the same exact things all the time. Right? So this being said, I really hope you guys gain some value. If yes, please subscribe, like, and share the video with your friends.